Friday afternoon is always difficult. People are like, hey, what am I doing tonight? And where am I going? It's sort of seminared out. This is spectacular. I've been here 12 years, and as I said today on air, it's a most confused, conflicted Davos, and we've enjoyed the honor of having Professor Spence and Dr. Bremer join us, and to speak with Arif Viasvel, Ricardo Marino with us with a Latin American view, and I'm absolutely thrilled that Mrs. Beschloss has joined us with the most interesting and eclectic view. So I think it's a timely seminar. We've had any number of ways to go, and I think instead of the normal format, I'm just going to go as rapidly as I can to give you the insight of 5 very different and esteemed guests, and then we'll go to your questions and observations, short observations too, to squeeze it into 1 hour. Emerging markets, decelerating growth, rising U.S. interest rates, changing the outlook for emerging markets, global high growth markets, and of course the idea of a divergence, a separation, and maybe a partition of emerging markets as well. And of course we have here so many nations represented, Michael Spence in New York and Italy, and spending a lot of time in China, Arif with a fabulous knowledge of the Middle East, Afsaneh Iran and her work in Washington. Ian Bremer is from the land of G0. I have no idea what that means, but we'll get to that as well. Mrs. Beschloss, let me start with you with the ultimate emerging market with Secretary Kerry speaking today. I guess Iran is the ultimate emerging market. Do you have optimism about an immediate impact from new flows in and a new animal spirit within Iran?
Interesting question. We've been talking a lot more about the politics of Iran in the sessions in Davos, and I think much less about the economy and the markets, as you said. There is a vibrant capital market in Iran relative to sort of other, I would say, frontier emerging markets. So there's a real capital market. You could have borrowed on credit in Iran like 30 years ago, before the revolution. In some ways, obviously, limitations now have changed those capital markets. Iran never, before the revolution, needed to access the bond market, so has never issued an international bond. So looking at the markets, my old friend Barton Biggs used to desperately want to go to Iran to hike and to be the first investor in the equity markets there. And like unfortunately, he passed before being able to do both of those things. So I think it provides huge amount of potential. The most interesting part of, I think, Iran's capital right now is that while the education sector has gone back hugely since the revolution, you have at the same time, on a relative basis, have very good technical education. So mathematicians will come to work at a firm like Renaissance, at the hedge fund. Doctors will come with their doctorate degrees and move right into US top research institutes. That's one side of the economy. The other side of the economy is huge inequality. You have got huge problems with health, and AIDS is a big problem in Iran. The health problems in Iran today are both the basic health problems in terms of the fact that vaccination has kind of gone back. So you have basic health that had, got better, has become much worse, as well as the modern diseases of diabetes and AIDS and so on and so forth. So you have to deal with those, and people don't realize at the same time what you hear from Iran right now is, for example, there's a big refugee problem. The Afghans and Pakistanis who moved into Iran, believe it or not, that was sort of the first wave. More than 1 million, I hear.
It's not making the cover of the Washington Post.
Right, and what I heard is that there might be like a market so that in the war with ISIL, there's a disproportionate number of these refugees. They will get Iranian nationality potentially if they get $5,000. So.
Arif, I look one day after the agreement or whatever in the Wall Street Journal right-hand column is already pushing against the hopes of a new Iran. From a Middle Eastern investment perspective, do you have an optimism of moving forward? And I don't mean long-term, I mean even in the next 6 months.
So look, since you started by saying let's talk about the economics in Iran, I have to say that the trade between the Middle East and Iran we must not forget that there are geopolitical issues that are at play here. And definitely within the Middle East and definitely within the countries on both sides of the Gulf. So I feel that when you talk about the prospects for Middle Eastern business in Iran, I think the politics have to clean themselves out first, and only then will the opportunity present itself.
Okay, so first look at Iran as an emerging market. Part of the theme that we have is rising U.S. interest rates. I guess in the last few days, thank you, Mr. Draghi, that's been amended at 197 on the 10-year. Michael Spence, give us an economic lesson on the certitude of rising U.S. interest rates. We've only been wrong for the last 6 years.
No, that's right. So we've had growth forecasts that were overly optimistic, and there's a range of views. But I think there's a clear sign of weakening, a growing sense that we'll come in under the 2+% forecast. And that leads people, I think, correctly to guess not that the Fed will stop, but maybe slow it down. But that, from a kind of global point of view, means slower, not whether or not, just slower. And I think from the emerging economies point of view, not that much change. There's nothing has been telegraphed as carefully as this, plus and minus. So nothing like a taper tantrum is going to occur, with the volatility that went with it. But on the other hand, a number of emerging economies living in a world where money was rushing around looking for yield, got a bit dependent on very low-cost external capital. And I think, hopefully, the majority are getting ready for a process of going back to a slightly different world. I do not, Tom, expect a dramatic outrush of capital that produces liquidity crises in most places.
Oh, that's been the responsible message we've heard from you for years. Part of it is that phrase taper tantrum. I'm going to blame the media for inventing that. I'm not quite sure who coined it. How do you bring a developed world taper tantrum over to the emerging markets?
How do you bring it over?
Yeah, do you have a shock within the spread market? Do you have a shock within the currency market?
Well, you could. I mean, if you get a big enough convulsion in a number of markets, including the equity markets, and people panic, then we have a different scenario and story. And I know this is being talked about around here. Nobody has a crystal ball, and certainly economists have the worst ones, but I just don't see that as the most likely outcome.
Let's look at the outcome of living with the reality. Ricardo, with your focus on Latin America, you're enjoying Brazilian real, 4.10, 4.15, all the political story of South America. What is your optimism that on a political economic basis, the emerging markets of South America will clear in 2016 and move on to a better economy and a better politics?
Well, first of all, we need to understand the context those emerging markets, especially Latin America, is living at right now. And you pointed out the panorama of this new reality that basically we have the end of a super cycle in emerging markets, and Latin America is very correlated with the price of commodities. And as you said, once the tightening cycle of the Fed starts and China shows the slowdown and oil prices are below 30, will surely impact Latin America. And we see this trend of commodity prices going down. If you look adjusted to CPI since 1920s, it's a downtrend. That will affect because copper prices, Chile is very dependent, down 50% this year, iron ore 80%, soybean 50%, oil more than 70%. So what does it mean to emerging markets? All of these forces definitely means a more challenging and more risky environment ahead. And as U.S. interest rates goes up, emerging markets bonds, Latin American bonds, will be less attractive, liquidity will be more expensive, and developing countries in this region will face tighter economical, financial conditions. So all those crises, as the Chinese say, create opportunities.
Right.
And what we've been seeing, once the government has to adjust budget, adjust the fiscal side of the economy, we see opportunities for the change of power as well, as you saw in Argentina, and we saw the second elections in Venezuela as well.
When you look at South America, part of the question here is financial stability. I don't need you to make an earnings forecast on your own bank. If you'd like to, you could. But the basic idea of financial stability, Willem Bouter of Citigroup and LSE, would suggest we have good financial stability within all our turmoil. Would you suggest we have good financial stability within your South America?
I will suggest so, and better than in the past. If you look at the emerging markets had sudden capital outflows, especially last year, and we're going to live with lower and much more volatile commodity prices going ahead. In general, we see that most of these countries, they're more resilient. They have prepared their economies for this downturn of the cycle. You see the buffers of international reserves, they're pretty much adequate levels in most of the countries. Even Brazil has 20% of GDP on reserve. External positions also have become more resilient. If you look to what short-term debt is just a fraction of the liabilities and mostly local currency denominated without any mismatch. And also public debt is pretty much under control. Exception is Brazil, which is spiraling a little bit up, so already 70%. And the currency devaluation, which will become and make those countries even more competitive on the export side and the balance of payments.
That's good to get us started. I saved Ian Bremmer for last. I urge you to look at his article in Norm Pearlstein's Time magazine, a really wonderful issue on this gloom about recession, and I know if you push against that gloom with some real optimism. Ian, you speak within your wonderful Eurasia Group piece on the hollow alliance. So we see that with Chancellor Merkel now coming here this year. How does the hollow alliance across the Atlantic among the haves affect the emerging markets?
Well, yeah, okay, I see why you wanted to go last on that. It's not a small question. I think around all of these individual issues, in many ways, I think the political risk environment is not quite as dire as the mood in Davos this year. Certainly in terms of China and the ability of the Chinese government to respond.
You think Mr. Soros is off the mark?
I think a lot of people are off the mark. Not economically. They have a better sense of that than I do. But the ability of the Chinese government to actually say not just they're going to spend reserves, but that any Chinese market, national market participant will say how high if you tell them to jump. I think state capitalism gets you that. And the fact that they haven't asked for that means they haven't had to, but they will. I'm less worried about that. I'm not worried as much about Brexit as some people are right here. But I do think that the weakness of what has been the most important alliance in the world, and certainly for this organization, right, for the last 75 years, the one that has upheld security norms such as they've existed, and has upheld the free market and rule of law and democracy and all of these, that is now at its weakest point. And I think that does a lot to unnerve us. It undermines the way we think about the future of a global free market. Clearly, emerging markets will hedge much more in that environment. They'll be much more interested in going separate ways.
I just this is a terrible mistake on my part. Whatever you do here at Davos this year, look at John Carney in the Wall Street Journal's wonderful article on hand movements at Davos. I'm very paranoid now about my hand movements, Ian, because he just did a wonderful spoof. You go like this, you go like this. So I'm worried about my hand.
You have larger hand movements than most people.
Yeah, that's true. But I got to be careful about hand movements. Arif, you are optimistic within some of the gloom that's here. When you look at Ian Bremmer's hollow alliance, do emerging markets, and for that matter the Middle East, but let's take it broader, do they need to go it alone finally and begin to ignore economically and politically the developed world?
The first thing I think we should do is take a deep breath and not panic and not get concerned. And yes, there is a negative mood in Davos, but I think it is more a question of people coming into this forced by geopolitics to think negatively and try and see if this becomes a self-fulfilling prophecy. Let's step back from that for a second, and let's just look at what you mean when you talk about emerging markets. And there is a reason I call them global growth markets, and that is not just my optimism, it is the sheer dynamism and the sheer force of numbers, okay? So Tom, if you look at the long-term trend lines that these markets represent, 2/3 of global GDP growth till 2030 is going to come from these markets. 2/3 of consumption growth till 2030 is going to come from these markets, not from the US, not from Europe, not from anywhere else, from these markets. They already make up more than half of global GDP on a PPP basis, and they're going to go to 2/3. 90% of the world's urban population growth is happening here, and 90% of the world's population under 30 live here. So let's stop for a second and think, how is Coca-Cola, Nike, Nestle, Kimberly-Clark, and the list will keep going on. How do you think they're going to make their money, Tom? They're going to be selling there. More importantly, they're going to be investing their capex there. So when you look at my optimism framed in that light, And no, hang on. And sorry. And because there's no point completing half a sentence. And when you look at the fact that these opportunities that we see in these markets translate themselves into a higher consumption capacity by the people in these markets, you'll see why optimism is present.
Within that, Mike, can I go back to your wonderful book on global growth of a few years ago on convergence? It's a spectacular, thoughtful book that's not dated at all. Part of this optimism is a new transnational company that's going to invest for growth within emerging markets. You're in China a lot. Do you see a new corporate action that leads to a better growth pattern and a better optimism, as Arif talks about?
Well, I do. I mean, I think that, on a medium to long-term basis, all of that is exactly true, unless there's a cataclysmic destruction of the convergence process. All these economies have higher potential growth and so on. In the short run, Tom, there are questions of volatility. There's a slowdown in these markets because the other half of the global economy isn't growing very much, and those are big markets. Yes. Europe. I did a calculation. The advanced countries, the so-called developed countries, since the start of 2008 have grown a total of 6% cumulatively. In that period, China grew 60 or 70%. Now, I don't know how they did that exactly, but it produced some imbalances on the way through. But I think the opportunity is enormous. And then if you're talking specifically about China, the remaining questions is the Chinese government's management of the economy with respect to access to foreign competitors. And I have to say that's an open question.
And don't you think that the fact that the commodity super cycle is now over, that's a recognized fact. And we can put that behind us. But despite that, these emerging markets, as we refer to them, are going to be delivering us 4 to 4.5% growth this year.
And Austin, the thing that you speak of, which moves away from the commodity super cycle, is the commodity super cycle of, let's begin with health. Yeah. We were talking before this panel, I'm thinking of things I learned in grade school or college or whatever on microbiology and virology. Forget about that. The health opportunity within emerging markets can participate with growth. Discuss that, please.
Huge health opportunity because basically, as the economy grows, in various populations, you eat better, you start sending your children to better schools, you need better health. And if you go to a place like China, there is very little access. So there is huge amounts of investments going in China, but also in Africa, in Latin America. While other sectors are getting hit, a lot of money is going into health and private education, the reason being people need it. And if you look, we all looked at the numbers for MSCI and how much the market has got beaten up, 14% last year, a lot the previous year, already more than 10% this year. If you look actually at the health side, much less. And if you invest well in these countries, and we invest across all of them, there is huge opportunities. The insurance sector is growing in these countries, providing insurance for health, as well as health delivery, as well as hospital systems, as well as generate drugs. And you have, unfortunately, sadly, got the big problem of diabetes, for example. We're talking in India. Normally you would think when I was working at the World Bank, there were all kinds of other diseases we were working on, and they still are there in many of these countries. But some of our diseases in the developed world have now transferred in a huge way to the developing country, creating one potentially future fiscal drain, but the other side of it, the flip side in the market, is opportunities for investments.
Ian, comment on what's in our textbooks that we all learned about the emerging world. I mean, you can take it by, we're honored that Professor Spencer, with us studying with John Hicks at Oxford a few years ago, moved from Michael Spence's undergraduate era and graduate era forward to the youngest person in the room. The emerging market textbook, totally different. And you've captured this in your G0 outlook. Are the institutions there to help with the optimism we hear at the end of the row here?
Well, clearly the institutions are weaker. It's a reason why we should be ultimately more optimistic about a country like Brazil. Does anyone looking at Mexico really think there's less corruption in Mexico than there's in Brazil? Or we just haven't looked into it closely, right? I don't think you should necessarily be penalized long-term when we're thinking about where the trajectories are going, when the fact that you actually have a judicial process. Of the BRICS, right? In Russia and China, there'd be show trials, And in India, it would take 10 to 15 years to actually get to a court that could actually see it, right? Brazil is in the middle, but ultimately I think they work through it. Look, one thing that I think is very interesting about emerging markets, if we want to talk about this really big theme of the fourth industrial revolution, right? When it hits, if it hits, it's hitting here. And it's hitting here in two very different ways. The first way it's hitting is to the extent that you're going to be unemploying lots of people, you're talking about the global middle class. That's not the United States and Europe. We're all rich people. That's what happens when China no longer has the ability to have relevant manufacturing and service labor. And they don't have the institutions to handle that, and their politics are going to react very badly. So that's an enormous risk. And that's going to be true across the EM space. The other side of this, and you mentioned, you kind of got me thinking about it when you talked about healthcare, is that the fourth industrial revolution means that every sector is becoming kind of strategic from an IT perspective, right? Like healthcare is not just about providing health, it's a lot of really powerful data. Well, do we think as that hits that a state like China or Russia is not going to want to play a much more interventionist role in terms of understanding that data, controlling that data, manipulating that data, profiting from that data? I mean, I think there's a lot to play for here. ExxonMobil has known that their sector has been strategic for decades. I don't think that the healthcare providers necessarily think that way, especially when they go into China. If the fourth industrial revolution hits the way people have been talking about, like just before the robot takeover, I think that this is going to be a core question for these markets.
Michael Spence, to take it back to Adam Smith, is there a constructive invisible hand in emerging markets that's different than in the developed world, which again leads to an optimism about future growth?
Yeah, it's the dynamics, it's the trend. So if you took an early stage developing economy without the institutional infrastructure and all the other things, you'd say, gee, this isn't going to work. But that's not how the process works. They build the economy, they build the resources to invest, they build the capabilities. Look at macroeconomic management in world banks 25 years ago in emerging economies and now. They're superbly talented and competent. And that's just one example, Tom. So I think these barriers and challenges are real, some internal, some external, but there's a fairly long and improving track record of managing through them quite well.
Ricardo, I'll come to you in a moment. Ricardo, how does Brazil find stability besides holding an Olympics? I mean, I don't need you to comment on the immense political challenges within Brazil right now, but maybe it is an emerging market, but boy, is it its own political economic experiment. What is your optimism that they will get back on a growth trajectory?
Well, I'm always an optimist by nature. Maybe more cautious, optimistic in this case. And I agree with Ian, what he said, that although we're going through this turmoil, very challenging crisis on the economic side, on the fiscal side, more than we've been seeing the last 70 years, I'm a cautious optimist on Brazil. It's still the seventh biggest economy in the world. We have some difficulty in managing the state, but we're still a great nation, full of entrepreneurs, full of people with good values, people who believe and build in the country, they keep the money into the country. We have good institutions that are being tested in this stress test that we are suffering. The three powers are quite working well and independent. The judiciary is doing a great work in cleaning up the political sphere and the business level in order to prepare Brazil for this new cycle. We have a very democratic country, it's a mature democracy, people on the streets protesting, reivindicating, empower citizens so they can demand their rights and the quality of the public service they deserve. But if you look at Brazil, for sure we're going to have a low growth environment going forward the next few years, and also a current account adjustment going forward, and that depreciation of the currency will help in that way.
Our John Micklethwaite spoke with the newly minted leader of Argentina today. What did you learn from the Argentinian election for all of Latin America?
Well, it's a funny story. I was here with Macri in a panel like this 2 years ago, and he presented to the public that he will be a candidate for the presidency of the Argentinian government. Mm-hmm. They had a strategy to do so, and he'll win. I saw the faces of the people, a lot of doubt. But he said, if I go to the second round, things can change. Politics is not linear. And I really believe in him because knowing him from the past and all his career, he's very business-friendly politician, a leader. He's doing a great job in taking the reforms and opening up the country to the real world, debt capital markets, finishing the cepo cambiario, the controls, the import and export barriers that Argentina had, and having an inflation targeting regime to fight the high inflation levels that Argentina has. So if you talk to Argentinians, they have confidence now. Although the economy is still in recession, they have confidence that the country will get better, they will invest, they start bringing even the money back to the country. So I'm optimist of Argentina and the relationship that Argentina has with Brazil on trade.
Arif, within the business dealings you have, and particularly within private transactions, fold in the government changes within the Middle East. If we look at the immense challenges that Saudi Arabia has right now and have been witnessed even in the last few weeks, how do you perceive governments to support a rebound in economic growth within the Middle East?
I think, look, the Middle East is a complex, both geopolitical exercise to try and unravel, especially in the context of the outcome of the Arab Spring and the more recent developments in Syria, etc. You can't disaggregate them, but it's equally not right, in my opinion, to sort of put everything into one bundle. Saudi Arabia, at the end of the day, yes, is going through a structural reform issue simply caused by the fact that the oil price is low, but Saudi Arabia also made a very strong policy statement a couple of years ago or 18 months ago, where it stated very clearly that it was going to maintain market share. So it knows what it's doing, and it knows how to go about doing it as well. At the same time, countries like the UAE and Qatar have been preparing for a reduction in the price for a long time, so they're not that affected either. Now, this is not just my natural optimism talking. This is just facts on the ground. This is how businesses are growing. We're making investment decisions all the time. But if I can use that example and just say that for a second, let's take a step back in this discussion across markets and say we need to stop thinking of investing in this part of the world in this acronym-based approach. So we had BRICS, and then we had emerging markets, and we have all of these things. Let's disaggregate it for a second, Tom, and say there are actually three buckets. Okay, one is China, very clearly. The second is the commodity-driven countries, if I can be simplistic. And the third is private consumption-driven economies. Okay, now China is a facet all by itself. A slow China at 4.5% is still double a fast West. Okay, and we shouldn't really be too surprised about what China is doing, because analysts for a long time have been arguing that these rates have to come down for long-term stability. And then you have the commodity-driven countries. Of course, they're going to get affected. And then you have countries that are exporting to China that are going to get affected, like Angola and Zimbabwe. And then you have these private consumption-driven economies that are actually booming.
Give us some names there.
So, for example, that's where I invest in. That's what I call global growth markets. So I will talk to you about countries such as Mexico, Colombia, Peru, and Chile in South America. I will talk to you about countries in North Africa and Ghana and Nigeria, Kenya doing quite well. In Asia, we're talking about Vietnam and Indonesia that are doing extremely well from a growth perspective. And where we put our money is in private companies. Why? Because they're more reflective of the economy, and they're much more they are the causes of driving the employment cycle in those economies. They're the causes of driving value creation in those economies. We're too often driven by this public market hysteria, right? Public markets, unfortunately...
Did you just take a shot at Bloomberg?
No, of course not. God bless you. Good thing it's not a sponsored
these are
panel.
important observations. Ian, you wanted to jump in here with an observation on the groupings that we have.
Well, no, the groupings are great. First of all, I mean, I think everyone here can agree. I mean, Goldman Sachs got rid of the BRICS, sort of fund only 88% from the top, and I don't think anyone could put Russia in the same category as Brazil. I mean, the markets have literally, nothing in common in the way that they're proceeding. But I do think the geopolitics of this are becoming an interesting overlay, right? Because this year, we're trying to figure out, we understand Europe has macro implications. We understand China has macro implications. We're trying to figure out if the Middle East has macro implications. And we don't really know yet, right? Because right now, the United States is acting like it's Rwanda. We're spending a lot of money trying to fix it, right? A lot of humanitarian aid. But aside from that, there's really not a lot of interest in intervention. I've had at least 10 people ask me, how are we going to fix refugees? We don't have any solution. And I'm like, yeah, of course we have a solution. Not our problem.
But the country...
That's our solution.
The country through which those refugees are flowing, which is Turkey,
Yes.
happens to be going through a much smaller deficit than it's ever had, thanks to the fact that the oil prices are low, and its economy is growing at a fairly decent whack as well.
Absolutely true. But my point, and Turkey's also got governance issues, and
Yes.
they've got security issues and all the rest. But I think about the Middle East itself. To what extent over the next 3-5 years, as this persists, because anyone that looks at oil, Iran versus Saudi Arabia, U.S., Europe, basic geopolitics understands that the Middle East crises are going to get worse. Whether it's Yemen or Syria or Iraq, we know this. But the question is that going to actually cause suddenly geopolitics to make oil prices whiplash when Saudi Arabia becomes unstable? Or does it become another Islamic state in a part of the territory that nobody else wants and has no cash that basically gets contained? And you have a whole bunch of these, lots of little failed states. The one other thing that I think we need to pay attention to is why is it that these incredibly capable in terms of recruiting and social media, in terms of creating explosive devices, no cyber, right? I mean, the North Koreans could take down Sony Pictures and make everyone aware of it, but so far, Boko Haram, ISIS, not at all. We need to figure that out because that's going to give you